I got a new trade recap video for you guys today that you are going to really enjoy. This is coming back to back from my last trade I took during the week on Wednesday, I believe, on USDCHF. Now, this video I want to kind of get through the message of how important patience is in trading. In the last video, I talked about an indicator I created, but essentially it's this indicator on the top right here you guys can see that looks at higher time frame alignment based on the trading time frame we trade here at ASFX on the 15-minute chart. I have alerts set up on all the pairs that I look at. You can see all these alerts over here. All conditions are in long bias alignment, and I just go through and put those pairs on my watch list, and that's what I'm trading throughout the day. But yeah, I want to stress the importance of patience and waiting for those high probability trade setups. We never know what's going to happen next. We can enter a trade, we can get stopped out, or we can enter a trade and things can go perfectly based on the technical analysis we have done, our projected targets, and everything can go perfectly. I love when that happens. And that is what's kind of happened this week with me with both trades I've taken 2 for 2 on USDCHF. With the previous trade recap video I did, I'll put the link somewhere up here. You guys can go check that out. But really, it's very much the exact same thing. What I'm looking at, how I was looking at it, and how I kind of marked everything up. So this is the ASFX A2 signal. And these are A-grade signals, A-grade setups. Now, what that essentially means, if I bring on the rules here, is it looks at multiple different parameters and it will let you know, A, full trend EMAs, L50 perfect all day, B, full trend EMAs, L50 swap zones, proper zone at entry. So things like that. So A being the more kind of all stars aligned type of signal. And then obviously going down to, your signals like H over here, which is counter trend EMAs, L50 opposite zone all day. Things like that where, you're not getting full alignment in your direction you are trading. So I took the trade on Good Friday. Now, I do encourage everyone that does trade. There is no need to trade on public holidays. No need to trade high impact news events if it is based on, like we had NFP yesterday. What happened is I was out pretty much all day with family on Good Friday. And then when I came to the desk, I like to keep routine. You know what I mean? I just wanted to check the charts, and I was actively trading on that day as well because it's early for me. It's Good Friday here, but in the US, it's still kind of actively trading a little bit, and I wasn't kind of right in the middle of the day. So you can see we kind of have a little bit of volatility. What happened after my entry was pure news. I knew I wanted to be in and out of a trade way before NFP even hit. So just looking at my notes real briefly, let me see if I can clean this up a little bit. We had full alignment on the short bias. So if I get to replay tool here, you can see that we had everything was telling me to short this pair once again. Zooming out a little bit, we have price making that still bearish. You know what I mean? We're still seeing price make lower lows. We had price come down to this level, which was 0.9036. We had a massive bounce off that level where price kind of spiked down a little bit here, and then we had all these buyers come in. So this level or that price is significant to me at that point. We then made this lower high. So when price did retrace to these highs, all right, we used kind of this area here as a resistance level, and then we had another big move down where sellers took control again and just kind of reversed this whole move up. As we came back down to this level, structure was respected. Now, what that means to me when structure is respected is price came down, but we didn't close for a new low. We only wicked for a new low. And then what that looks like, if I zoom in here for you guys, all right, so it's like 1 pip away from this low on this candle, where price came down here. That's when we had all the buyers step in, and then we had sellers step in at the resistance level. And this candle here, as the sellers pulled down, we were unable to close for a new low. All right, so that structure to me is respected at that point. As price started to retrace, and then we came into the Asia session trading here, we just, once again, we chopped around just like Wednesday's trade, where price was just kind of respecting these lows, chopping around. Once again, we broke for a new low of day. So price broke below the Asia session trading. We created a new low, but then what else we did, we broke yesterday's low. So we broke the Thursday low, that basically essentially tells me that sellers are in control. We're making new lows. We're breaking structure. It's bearish price action. You got all of the high time frames in alignment. You got the 15-minute L50, which is market sentiment on the TDI here in the sell zone all day, screaming bearish bias. So the next thing as a systematic trader for me to do is just wait patiently for an entry to present. Now, this entry wasn't at a great zone. When I like to trade these A2s, you guys will see a lot more of me being really repetitive and trying to get this message across. But what I like to see in a bearish example, price move down, retrace, price move down, and then what I want to see is price move back to that previous lower low. When I see what I mean by that is I want to see price come back up here, test the 50 EMA. I want to see some type of rejections at this zone. I want to see price slowing down. Okay, I want to see sellers start to take control again. I don't want to see massive bullish bars, massive momentum smashing through this zone at this point. Okay, I'm looking for price to slow down in momentum, and I'm looking for an A2 signal with all of this in alignment to take it short. Now, ideally, I'm not looking for extended targets. Austin Silver just released a really cool reel on his Instagram. I encourage everyone to go check it out. But with these A2 signals, you don't want to be shooting for the stars. You don't want to be trying to get 4, 5, 6, 10 R out of them. Where I'm finding success and what I'm finding in my back testing, yes, you do find these runners. You do, get fundamentals and technicals line up where you can get 1R, lock your stop, news may hit, and you get that spike in your direction, and you can capture a bigger move. But it doesn't happen very often, okay? So when you're capturing 1R, I like to target structure lows, in this case in a bearish trade. I'm not looking to capture anything that, where price hasn't been in a while. With that in mind, let me delete this and we'll get back to the trade. And what I was saying is, to kind of give that example, I didn't like where the trade presented. It presented kind of in this kind of area. We kind of rejected these lows. If I bring back up the RSI and the TDI indicator, if you look at the RSI, there were many things that, I could have avoided the trade. Good Friday, public holiday, NFP day, all these things. You had this bullish divergence starting here, but I was only looking to capture a small bit of the move. I wasn't looking to kind of hold anything, especially on a Friday. As we got this A2 entry, I've left my notes here. The stop loss was above high of day, so I had a perfectly good stop loss. It was out of the way, wasn't kind of, below here where price was trading throughout the day. It was out of sight, way above the highs here. And let me just clean this up a little bit for you guys. So like I said in my notes, I love the fib stop above here. Once again, using the proper rules for the ASFX A2 entry, we use a trend-based fib extension from the low, in this case from the low to where the signal presented, which is the high of the candle here, back down to the low. So to demonstrate that for you guys, let me delete the fib extension here. So we grab from the low to where the high of where the entry presented, and then back down to the low. All right, and that gives us our 1.618 trend-based fib extension, and that gives us our stop loss. I would try and respect this stop loss as much as possible. For me, it's above high of day plus a few pips, which is perfect. All right, so I'm not putting the candle, just at high of day, which can give you better risk to reward. But once again, if price were to come higher and test this area, having it a bit higher there would be safe. If price was to kind of break the high of day and continue higher, you don't want to be in this short position anyway. Not yet anyway, your timing might have been off or whatever it is. Coming through to the analysis, let's jump forward a little bit and I'll show you how the trade pretty much played out. Now, once again, I'm targeting 1R. And in my notes here, you guys can see I closed here just before 1R. So I actually recorded my my trade as I was in it. The reason I did that because I'm trying to find bad habits that I've kind of created for myself that do require attention to detail. Whereas let's say you're up, you risk $1,000 on a trade, so 1% on a $100,000 account, you're up 920, you close the trade. If you were to do that 5, 10, 15, 20 times within a few months, add up the percentages or the percentage you would have lost basically from closing early because of emotions, because of opinions, because of what you think is going to happen next. You think your take profit's not going to get hit even though it's 1 pip away. In this instance, I did close early, and I'll show you why. As price closed on this 15-minute candle, I was glued to the charts. I was watching price come towards my take profit. This is a very strong bearish bar. And what I have seen through experience of watching the markets, the live markets, when you see a strong close like this, you usually see a follow through most of the time. But in some cases, some rare cases, you can see a strong bearish bar and then you can kind of see a pullback. And because this was Friday, because it was Good Friday, public holiday, it was NFP day, we had this bullish divergence kind of building in here like I showed you guys before. So price action made lower low here on the RSI low, RSI made a higher high. So that gives us bullish divergence, which means we could see a reaction at this level. So as I was in this trade, getting really close to take profit on the next bar, we did have a bit of a pullback. We did spike down, and that's before this price came down here to 0.9036. I closed the trade. I closed it at 0.95R, securing my profits. Now, if I would have left the trade, I would have been at a full 1R, which is down here. And I know it doesn't seem like a lot, guys, but over time, if you backtest and you are getting out and you are logging these exact entry and entry points, your backtesting data is going to tell you a different story based on your live trading. And live trading already, you already have spreads, slippage, human error getting involved a little bit later. When you're backtesting, you can kind of just stare at the chart for as long as you want and mark up your exact entry point. You can even add in your average, okay, Euro USD usually has a 0.5 pip spread, 1 pip spread, whatever you want to call it. In the live market, human error, you forget, you get involved a little bit later. You are, and I'm going to talk about that point in a little bit. You get distracted, your execution is a bit laggy. Everything like that, those things actually play a huge role, especially on the lower time frames. I got involved, I forgot to kind of mention this note. So I did get involved in this trade at a better price because I don't start my trading until 6 p.m. And you can see this signal presented at 5:45, so 5:45. I got to my desk at 5:45. I couldn't enter the trade because you got to follow your rules. And as this kind of got 6 p.m., we did get that pullback to the 50 EMA. I did like the rejection. Like I said, I wasn't big on the zone. And if I did get involved at the entry of here, let's say, we add a bit of spread, I'll show you the difference in what could have happened in the outcome of this trade. So if we go forward here, you can see price, we got another A2A signal there. I don't even think we reach 1R at this point before NFP hits. Let's have a look. No. So that was the NFP news event hitting there. I'll get rid of these notes to clean up the chart. But that is kind of how important it is to kind of shows like a visual representation of how important it is to kind of understand, getting in at a better price or executing when you need to execute on your system. If you hesitate, if you wait, if in doubt, stay out. Don't chase a trade because you think it's going to go in your direction, because you never know. With the bullish divergence here, public holiday, which was Good Friday, NFP day, I could have easily sat on the sidelines. I didn't even have to show up to my desk. But you know what? It's a learning experience for me. I'm back at the charts. I'm very excited to be actively trading again. And for me to get the entry where I had it, which was a little bit higher, at 0.99448. That was my entry point, which was perfect for me. With that stop loss, 1R was very much achievable getting in at that better price before NFP hit. But that's pretty much what I wanted to show you guys. Following that higher time frame alignment, finding pairs that you want to trade that are in full confluence with your active day trading time frame, which is the 15-minute for me, can really kind of set the tone on what you're doing. Everything was in alignment. I secured the trade very early, closed it out for a small profit Obviously being a NFP day and public holiday, I risk, way less than I should be risking on this kind of given trade here. Hope you guys got some value out of this video. If I want to do these trade recap videos, they may not be as frequent. This just happened to line up perfectly with 2 back-to-back trades on USDCHF this week, which was great for me. But I may go a week, 2 weeks without trading. And that's just something I got to come to terms with, because it's one of those aspects that really kind of hindered my trading, a few years ago when I did start day trading. But it's also kind of something you got to understand. It's not consistent in the terms of, there may be some days where you're not going to find trades, and you got to be okay with that. There are going to be weeks where you might not find trades. And because I'm focusing on such a selective few pairs that are in full alignment, that may not happen for a period of time. And I just got to keep showing up, keep in routine, and just giving my best performance on the charts day in, day out. It doesn't mean, there's days where I'm going to get to the charts and I'm not going to trade. Doesn't mean there's no growth. It doesn't mean that I can slack off. And this is something where I really want to talk about in my next video, with the discipline aspect of trading that no one really talks about. It's very much a gray area where, a lot of people really get stung by not understanding the amount of discipline and the amount of work that still has to go in to perfecting yourself and performing on your A game, even when you do hit that consistently profitable status. In fact, it might even require even more work from what I am seeing and what I'm experiencing myself. But that's for another video, guys. I really hope you enjoyed this trade recap. Hope you're all doing well. Take care, and I'll see you all in the next video.